Let's get in then Ram Pitre. He's Senior VP, Head Commodities and Currencies with Anand Rathi, and he joins us live on the show. Ram, hi. It's a complete decline coming in for the precious metal prices, especially for gold, which is trading very near to its cost of production now. How would you want to trade that?
In fact, last week only when international gold prices has broken a very important level, technical level on the downside, around 1320, it has given a indication that market likely to go further down. It is heading towards 1190 is the immediate target at the moment. And any rally on the upside, it is basically capped at almost $1,270 or so. So the range for the day between 1190 to 1270, the either side breakout will give the clear indication on international market. Coming back to domestic market, rupee is still holding at around almost 59.80 level or so. That is actually only because of that some sort of gold rupee levels are holding at the present level. Otherwise, it should have fallen further. So on a domestic market, again, I would like to go with the trend. If we get around 25,900, 25,950 on the upside, it's a sell on a rally with a stop loss of 26,100, and our target is around 25,700 or even 25,550. So basically the previous low is around 25,270. The break of that, the straight fall can come to almost 24,800. So at the moment it's a sell on a rally with a stick to stop loss.
Ram, how would you look at the silver, because that is worst performer in commodities, down 35% this quarter now and has broken below 40,000 from all-time highs of around 74,000 rupees in 2010. The kind of decline that this commodity has seen, what's your sense?
Again, silver maximum upside, we can see the corrective rally almost 20 and a half, but I don't think that corrective rally is likely to hold that level. We have important level of $19 has broken now, and it has gone to below 19, it's 1880 or so it is trading at. I think the main trend has remained bearish and likely to continue. My actually immediate target is or the short-term target around $14.45. So again, it is sell on a rally on in domestic market also. If it comes to around 39,200 is that band, you can just go short with a stop loss of 39,550. And our target will be around 38,750 to 38,500. 38,850 was a very, very important level on the downside. It held for some time, but again it has broken. So it looks like it is a further pressure is there on the silver going ahead.
And it doesn't end there, Ram. There has been decline coming in for other commodities as well. Take a look at the copper prices, because we've seen a third quarterly drop coming in for that one as well. Copper prices are down nearly 10 to 12% in this quarter. How are you looking at the base metal space, given the kind of concerns that China and Fed seem to be throwing up?
Yeah, the same thing continues, because the strength in the dollar likely to continue only on dollar index. If you see the 82.75, 82.80 level is quite crucial, important level, and likely to consolidate at this level between 82 to 82.90, 83 level also. That break of 83 will further put pressure on the most of the commodity prices. Copper, important level on upside at 7,200 in LME held very well, and it has dropped to almost 6,600. And the previous low also it has broken. So it looks like it is heading towards 6,500 to below 6,500 level coming in the short term. And domestic market, again, it is hovering around the 400 to 410 level. But for today, on intraday basis, again, it is a sell call on copper at around 400 to 404 kind of a level with a stop loss of 460, 406. And for a target price of 395 or even 392 can be seen. So again, most of the base metal pack, it is still weak and further likely to go for the downside.
Now, is it just copper, or would you look at the same way at nickel and aluminum as well? Because those are also trading at around 3 to 4 year lows in the market there.
Yeah, nickel, basically it is consolidating 820 levels. It is holding from last 10 days. Looks like it is a consolidation stage. It is not giving the clear signal which way the market likely to move. But at the moment, again, like copper and other base metal pack, it's a sell on a rally on nickel also.
The decline has also come in case of crude prices, down nearly 3.5% for this quarter. And if you look at the US inventories, those are the highest in 3 decades. Do you think that would continue to put pressure going forward as well?
Yes, definitely. As I mentioned earlier, the dollar index, it is going up, and because of that, there is some sort of a pressure. And so far, we have seen a 90 and 99 level, but if the 90 level breaks on the downside, it's a double pressure on the crude oil and likely to go further down. So on the domestic market, again for today, we are given a call on domestic market around 5720, 30 is the level where you can go short with a stop loss of 5760, and definitely we are seeing by evening around 5610 or even 5590 can be seen.
And Ram, much of the eyes, of course, are on the Indian currency, which also has continued to decline today, more than 0.25% on the lower side. What's your sense coming in for that one, especially ahead of the CAD numbers on Friday?
Looks like 60 is a psychological level, is likely to hold temporarily, but the break above that level, it can the quick rally to can be seen to around 60 rupees 40 paisa or so. But overall, it's some sort of 60 and 60.50 is a intervention kind of a level from RBI. We have to watch very carefully. Otherwise, the range from here onward would be 59 to 60 in the near term.
On a chart of possibility, Ram, how much would you give it as a percentage that the 60 can be breached in coming few sessions, perhaps 3 to 6 months coming in for the Indian rupee?
Looks like 60 is a very, very important level. I think technically it has to come down to 59 level first, and then the rally the further rally to 60.10 or 60.40 can be seen. But at the moment, I feel that slightly on a appreciation side till 60 holds.
Let's get in then Sushil Sinha from Carvi, and he joins us on the show with his strategies on all of them. Sushil, hi, welcome. Let's start with gold first, and the kind of declines that you have seen. What would your strategy be, and where do you see some support coming in now?
Yeah, we have seen a drastic fall in the gold prices and even silver prices based on the yesterday's US release, which has basically strengthened USD, and again whatever indications are coming that is going to further help in reduction in the prices of gold and silver. When we see today's release also, that is going to further strengthen the USD only, and therefore the all indication goes for on the selling side for gold and silver. However, one important factor, that is rupee, which is continuously depreciating, and I think that is possibly helping in deep fall from the gold and silver prices. It is checking it from the further steepest fall. Overall trend seems to be on the downside, and we'll be having a recommendation for selling only, and gold can be sold around 26,150 to 160 level for the target of first 26,000, and then likely to go around 25,700 in the coming days. A stop loss can be for the intraday trade can be put on 26 220 to 230 levels.
Sushil, if gold is down 2%, silver is down 3%, and we seem to be making lower lows into that space, especially in case of silver, where we have come down all the way from 75,000 rupees of an all-time high to below 40,000 today. What's your sense on that?
Similarly, for the silver prices, where more fall has been seen in the opening market at MCX, and right now it is below 40,000, so it can be sold around 39,700 level for the target of 39,000. Stop loss we have to put at 39,850 to 870 level.